Hello guys, this is Jaisal Bhatia, co-founder of Equwise. So this video is about the difference between trading and investing. Yes, this video is about trading versus investing. Okay, so we will have a deeper practical look. Nothing book knowledge, no bookish, nothing. We will straight away get to the ground realities in the practical life. What is trading? What is investing? What is the difference between that? Who should go for it? Okay, so now let's start. So what is investing? Okay, so in very simple terms, there is a company, okay, which has its own business maths. Okay, with that they generate profits. Okay, so now we can understand that they are making money through their own business maths. Okay, so we want to invest our money in that, so that with their business maths they are making profits and they are growing their business. So because now we have invested in their company, our money also follows their business maths and grows exponentially over the time. Okay. Now, what is trading? Trading is nothing but instead of us betting on someone else's business maths, we try to create our own business maths. Okay. How? Let me give you an example. There is a stock at 100 rupees. Okay, we buy it at 100 rupees and we keep the stop loss at 95. Okay, and we keep the target at 110. Okay, so this in terms of risk reward ratio, it is 1 is to 2. Okay, where you are ready to lose 5 rupees against 10 rupees of profit. Okay, now let's say 50% of the times we are right. Okay, our trading target gets hit 50% of the times, and 50% of the times we hit the stop loss. Okay, so now mix of 1 is to 2 with 50% accuracy together is a very positive money making model. Okay, so over here now you will be betting your money into this model, into this business math. Okay, so in simple terms, investing, you bet on someone else's business math, someone else's team. Okay, in trading you bet in on your own business math. Okay, so now let's see who should prefer trading and who should prefer investing. Okay, now very simple terms. Okay, anyone who wants to rotate their capital, okay, they will prefer trading. Okay, trading is better for them. Now, what do I mean by rotation of capital? Okay, in simple terms, they have 10,000 rupees, they put it in the markets, okay, they see 8 or 10% growth, they exit it immediately, okay, that profit they take it out. Okay, the capital that is left over 10,000 rupees, it goes back into the market, generate some money, exit, take the profit out, put it back into the market, generate some money, pull it out. So this keeps on happening. This is called as rotation of capital. Okay, second, for people who have less holding strength in the journey of markets, holding strength is very very key important aspect for the exit plan. Okay, now let's say I give you a multi-bagger. Okay, and I tell that the target for this multi-bagger is, let's say, 400%. It is going to hit 400%. But if you are not having the capacity, the holding strength to wait till 400%, then what is going to happen? You're going to exit in between, right? So you don't have that strength. So anyone who doesn't have that strength should prefer trading. Okay. Then there are some kind of people, some category of people, due to life issues or whatever it is, they cannot keep their capital invested for a long time. Okay. Something like someone got a bonus in the month of Jan, but they can see that there is a commitment that will come towards August or September month. So what they will do, it is they don't feel like keeping the money into the markets for a longer period of time. Okay. Second thing, there are, for those people who don't want to stay invested in the markets, like they are always scared that anytime the market can crash. Okay, so they don't feel like keeping their money into it because they always get scared that what if the market crashes, my money will also go. Okay, so for those people, they should also prefer trading. Okay, and then anyone else who is comfortable with shorter times. Okay, it can be in scalping intraday. Okay, or little bit a bit longer. If you go, you can go for swing trading. Okay, so anything which is below 1 year, that kind of time frame, if anyone prefers, they can definitely go for trading. Okay, and one more thing that is very, very important is ability to get hits. Okay. Ability to see streak of losses, back to back losses, because trading is a game of probability. Okay. No one knows the next trade is going to be a right or wrong. They only know historically in the long run their game is going to work. Okay, so they don't know that next one. Let's say if someone knows that next trade is going to go for a loss, he might as well not trade. Okay, but no one knows that. No one can guarantee or can find out whether the next trade is going to work or not. It is just a business math that they have formed. 50% win rate example and 1 is to 2 risk reward ratio. It is definitely going to make money. Okay, and it is going to give it into your pockets. Okay, then also kind of people who can see, who have the ability to see bigger swings in their account. Okay, let's say if he has invested 10k. Okay, uh, he's able to see 20% drawdown. Okay, and then maybe the markets way take their way back up and it's back to 10k now. Okay, and then it goes to profits and they exit over there. Okay, so seeing a 20% reduction in their investment is a very big size of drawdown. Okay, so anyone who has the ability to do this can definitely prefer this. Okay, now talking about investing, who should go for investing? Okay, in very simple terms, the first point, anyone who cannot see the market every day, either due to their business because they're focused in their business, or due to their job, okay, where they cannot use their phones much. So they do definitely understand that markets can bring some good amount of money into their pockets. Okay, so but they cannot see the markets every day. They cannot monitor it. Okay, let's say even if they bought, they cannot keep checking whether what has happened, what has not happened. They cannot do that. For those people, investing is good. Okay, and then second thing is millionaire mindset. Okay, now, what do I mean by millionaire mindset? Millionaire mindset is where people believe that parking the money in a business that has good value, okay, that is called as millionaire mindset. They believe that this company has greater value, so it's going to work. They're going to do really good in the future. So because my money is also a part of their business, I will also be growing along with that. Okay, so they believe in value investing. That is called as millionaire mindset. Talking about mindset, I missed the point of interest mindset in trading. Now, what does interest mindset means? So in North India, we call it as byaj ka paisa. Okay. So wherein we have a capital, we try to generate some interest out of it. Okay. Let's say 12%, 15%, and then we don't trade for the rest of the year. Okay, our goal is to just make some 15, 12, 18% in a year and then just shut down the business. Okay, so that we don't want to park our money in FDs or something, so we try to go use the markets, generate some 10, 20% returns and then just stay low for the whole year. That is called as an interest mindset. Okay, now coming back to investing. Okay, now second thing, the most important thing is anyone who has holding strength. Okay, let's say I gave the example of 400%, right? 400% will not happen within 1 year. It may take 2, 3, 4, 5 years to happen. Okay, so anyone who has the capacity to wait until there, 4 years, 5 years, for those kind of people, investing will suit really well. Okay, now anyone who wants to achieve big financial goals. Okay, now they know that XYZ is their current financial position, but they want to go really high. Okay, but they understand that that's going to take some time. It's not going to happen immediately. It's not going to happen within a year. Okay, so they have big financial goals and they know that through long term investing like multi-baggers, 400%, 800%, 900% targets, they can achieve it. So for those people, investing is right. Okay. Next, is for those kind of people who can save some portion out of their incomes and keep it invested for a longer period of time. For those kind of people also, investing will suit really well. Okay. Now, second thing is, anyone who has good patience. Okay, patience to stay invested, calm mindset to stay invested in the game. Okay, trust in the business in which they are investing, and just stay patient. Okay, and also for those people who want to, be very ambitious and want to level up their financial status. Okay, there are some category of people who would want to do that. So for those people also, investing would do wonders. Okay, so now let's just talk about what are the risks involved. Okay, not just talking about what will happen is not enough. Okay, it's also very important to know what is the risk hidden behind everything. So in trading, currently we are talking about scalping, intraday, and swing. Okay, so when we talk about this, so scalping is nothing but where we take good amount of capital, good amount of quantity, okay? We put it into the markets, okay? And then we just want small targets and we exit, okay? Now over here in this category of trading, what happens is, let's say you bought at 100 rupees, a good amount of quantity as per the capital that you have. Okay, you are targeting only for 2 rupees, that is 1 or 2. Okay, now over here what happens is, let's say if 1 or 2 does not come, okay, suddenly there is a big downward movement. Okay, so from 100 it goes to 95. This is a big short move. Okay, in such moves what will happen, your money machine, the math that you're having will completely change. So over here what is happening, you are earning less but you're losing more. Okay, so this is where the entire math will change. Okay, so you will be losing a lot of money. Okay, so it's very easy to lose a lot of money in scalping if you do this small mistake. Okay, and there are also chances where your stop loss gets skipped. Okay, so wherein let's say you bought at 100 rupees, your stop loss is 98 or 99 and your target is, let's say, 1 or 2. If it is going down, and let's say if there's a big move that happened, one big candle, your stop loss will get skipped. Okay, your position will not exit and you will start seeing bigger losses. That is a very big issue with scalping. Okay, now talking about intraday. Okay, in intraday, the most important part is position sizing, because in intraday it is a leveraged concept. If you're using leverage in intraday, then position sizing is very important. Okay, you cannot risk bigger amount of capital at risk. Okay, because if you do that, then if the losing streak starts, because I told you it's trading is a game of probabilities. So when losing streak starts, it's going to hit you very bad. Okay, then second problem with intraday is discipline. It requires high amount of discipline. Okay, now if there is let's say you keep 10 rupees as target. Okay, but you get scared in between and then you don't take that target, you settle down for much lesser amount and then you exit. This will create a mathematical issue in your trading game. Okay, so what will happen, you will keep target as 10 rupees, stop loss at 5 rupees. You will exit at 4 rupees thinking, no, what if this goes reverse from here and hits my stop loss? So technically you're not hitting 10 rupees, right? So what is happening, you're planning for 1 is to 2 but you're executing below 1 is to 1. Now that will create a mathematical issue and that will take your account for a toss. Okay, the third point is that it's mentally very challenging, because in trading you might get series of losses. Now, when you get losses, you will think that your system does not work and you will try to make some other system. Every system will go through that. Okay. So let's say you make one system, it is going through that, but only if you stay into that same system for a longer period of time, things will cope up. But what will happen? You will change. Now, once you change, you go to the other system. What if the other system is also going through the same? So now what will happen? Continuously, you will keep facing losses, 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 and you will break more amount of rules. Also, one more problem is that let's say you have like 3, 4 losing streaks. Okay, the fifth one, what you'll do, you will increase your capital, you will increase your position size, trying to recover it in one move itself or in two moves. In that, what will happen if the loss continues? Now you will get a bigger loss. So it is very mentally challenging. Okay, humans are technically not made for trading. Okay, now talking about swing, swing is a bit more safer. Okay, now in swing, what happens is the main challenge that you go through is you need to park your money in a high quality business. Okay, over there, if you go for a lower quality business, anytime if market takes a dip or something, when market takes a dip, most of the stocks will take a dip. Okay, but if you have a high quality business, okay, what will happen is when the market recovers, your stock will also recover with it. Okay, so otherwise what will happen? The market will recover, but your stock will not recover. You get the point? So the next thing is position sizing. Okay, again over here you need to manage your risk really well. You cannot put 100% of your capital in that and then try to make your way through it. It will not work in the practical world. Okay, and then third point is timing. Timing the stock is very very important. Okay, so if you're doing swing, you should know good amount. You should know some decent amount of technical analysis. You should have well practiced technical analysis. Okay, so that you can time the stock well. So that because you're staying in the game for less period of time, let's say some days to some weeks, you cannot afford to stay invested for 1 year or 2 years, right? So you should time the market in such a way that it you enter in and in a less span of time it goes and hits your target. Okay, so this is another challenging part. Next comes our lord of stock market, investing. Okay, now investing is considered the most safest. Okay, because the probability of you losing money is very very less. It is far lower than scalping intraday and swing. Okay, now over here the problem that you will face is you may enter into a bad business. So again over here the challenge is you have to focus on high quality businesses. Okay, then second thing is the holding power. As I explained you earlier, if you're planning to invest, you should have good holding strength. Okay, so you should be able to hold longer and for a higher amount of targets, a triple digit or a quadruple digit, 4 digit kind of thing. That kind of targets you need to keep, and you need to stay in the game for a longer period of time. So holding power is a challenge over here. Okay, and the third part is the exit plan. Okay, entry is not alone important, exit is equally that very much important. Okay, so let's say you bought a 10 rupees, the business went really well, it performed really well, your stock right now from 10 rupees has gone to 100 rupees, it's 10x. Okay, now over there, now if you are able to detect a problem, okay, that it's there's something going wrong in the business, so over there you can exit at let's say 9 rupees with a 9x profit. Okay, you cannot stay forever in the stock. Okay, like let's say Nokia company, if you would have bought at very early stages, it went really too high, too high. Okay, but if you didn't have a proper exit plan and if you stayed in the business, imagine what would have happened to your wealth that you would have made on papers. Okay, now where is Nokia? Hardly people know about Nokia, right? So that's the problem. So you need to have a proper exit plan. Okay, so now we also need to focus on the tools. Okay, now what are the tools that is needed, okay, for trading and investing? So when you come to trading, okay, technical analysis is very very important part. Okay, because fundamentals will take a effect little bit in the longer run perspective, not in the short run. Okay, so technical analysis will help you to catch the short-term moves, the ultra short-term moves. Okay, then you should also have a risk management tool. Either you can keep your Excel sheet or whatever it is. The plan should be really, really perfect. Okay, then the third part is rapid decision making. Okay, so if XYZ thing happens, you respond like this. If XYZ thing happens, you respond like that. So your decision making cannot be slow. If you're going for like scalping kind of concept, you should be really very fast, very, very fast in taking decisions. Okay, now talking about investing tool, the three important tools is one, you need to have a research platform. Okay, there should be some platform that you trust, that you can go and you can read about the business, the company, the stock, what's happening, who's holding, what is the financials and everything like that. So you need to have a proper research platform where you can go and check the details, right? The second thing is financial reports. You need to go and skim through the reports to understand a little bit on what's happening, what they're planning, how is it going, and things like that. Okay. The third part is valuation models. You need to have a well executed way of valuing a business. Okay, so XY, like for example, if you're someone who understands business, then you should be able to understand their margins, the way they crack their deals. Okay, so things like that. So there are different kinds of valuation models created by any kind of person. Okay, so you need to have a solid valuation model so that you can see if it fits in that, then you can go ahead, right? So guys, this in short is a difference between trading and investing. Okay, so if you guys you know like this thing, definitely go check the description below. Okay, so we do have plans for trading, we do have plans for investing. Okay, and our plans come with risk management inbuilt in that. Okay, so you don't need to worry on how much do I put, how much do I don't put, and things like that. Okay, you will always be well equipped from our end. Okay, so thank you so much guys to for staying till the end. Okay, I will see you in the next video. Okay. Until then, stay safe. Okay. Play in the markets very wisely. Use risk management, account management. Okay. Don't take any kind of what do you call, emotional based decisions. Okay. Trust on numbers more. Trust on facts more. Trust on historical data more. Okay. So thank you so much, guys. See you in the next video. Bye bye.